Hello, chart watchers, and welcome to this Friday, March 1st, 2019 Market Watchers Live Show with your hosts, Tom Bowley and Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, the market is up, clinging to some gains today, but we were up quite a bit more. So we've seen a reversal in the first half of the day. But right now we've got the Dow Jones Industrial Average currently up 22 points, the S&P 500 up 5, the NASDAQ up 16, and the Russell 2000 hanging on to a 2-point gain. 10-year Treasury yield continues moving higher. It's now risen about 10 basis points just in the past 2 days. We're now up testing that 275 area. Volatility index continues to drift lower, even with the reversal today. Volatility down more than 1%. XLE leading to the upside today, along with healthcare. Real estate, negative divergence and all, struggling, and you can see falling back below the 20-day moving average. I think that sets up for more short-term weakness on the real estate group. Walgreens Boots Alliance out with the trifecta of bad news. Talk about that in a bit, but the stock really weighing on the Dow today, down more than 5%. And then a couple of earnings-related stocks, Gap and Dentsply, X-Ray, two of the top performers, actually the top two performers in the S&P 500, rising 19% and almost 16% respectively after posting better than expected quarterly results. It is another Friday, Mary Ellen. Good to have you back. How you been this week?
Really good. Yeah, keeping an eye on this pretty flat market.
Yeah, and I know, Aaron keeps us posted on your weather out there in Southern California. I know you're not too far. And it's been pretty chilly out there, I understand.
Yes, we definitely have had the fireplace going on a regular basis, which is always quite lovely.
Well, if you've got your computer tuned into Wall Street, then at least you got one part of your area that's really hot.
That's right. Oh, my goodness. Yeah, there has still been quite a bit that's been hot this week. So even though we look flat on the surface, there's a lot bubbling up underneath. So
yeah, it is funny the way that works. Even sometimes when the market's not doing a whole lot, there's still a lot of rotation that takes place in the market. It's not like everything is flat. You got areas of the market moving up, other areas moving down. It's just kind of balancing each other out.
Absolutely. Yeah.
All right. Well, we got a lot to go over today. So we'll go ahead and get started. I know we've got a great schedule coming up. I've got a workshop that I'm going to be doing on Tuesday. And to be honest, I'm not quite sure what I'm going to be doing it on. So if you have any suggestions, any topics that maybe you might like to have covered, I think maybe put that in the survey at the end of the show when you leave. You can type in maybe any comments there for a possible workshop for me on Tuesday. And then on Wednesday, we got Milan Vashnu, who will be joining us. He is going to be a new blogger here at StockCharts, focusing more on India stocks, a lot of those stocks that trade here in the U.S. And then Thursday, Mr. Wykov, one of Mr. Wykov's, Bruce Fraser, will be joining the show. Always fun to have Bruce on the show, so I look forward to that. All right, so what are we going to do today? Well, of course, Mary Ellen's with us, so we're going to do what's hot, what's not. We're going to share it. We're going to do a little back and forth today. So I'm interested to see, I think that'll be pretty exciting. And then we'll get into the 10 in 10. First stock today will be Dow DuPont, DWDP. Take a look at that. See what you think. I'm going to annotate that chart and 9 others starting at about 10 till 1. And we'll see if we match up in terms of how we're looking at it technically. And then finally, speaking of technically, we're going to end the show with Inside the Lines. And that is simply a segment where we focus on technical analysis. And we look strictly inside the lines of the chart to tell you what we think is going on with some individual stocks, sectors, industry groups, whatever seems to catch our attention. So that'll be a fun segment to end with today. All right, so let's get started. Economic reports today, you can see on your screen. It's kind of interesting because the government shut down. We got both December and January personal income, but they didn't give us January personal spending. So I don't know, maybe it couldn't catch up in time for that. But you can see December personal income came in much better than expected, 1% versus 0.4% expected. December personal spending was down, though, a little bit more than expected. And of course, we had that huge tumble in the stock market in December. December personal spending dropped 0.5% more than the 0.3 anticipated. I will say, though, that they went back and revised November's personal income and personal spending, and both of those were a little bit higher. So kind of offset that miss on the personal spending side in December. January personal income came in a little less than expected, actually dropping 0.1%, versus the 0.3% gain that was expected. And then February ISM Manufacturing Index and Consumer Sentiment both came out at about 10 a.m. Eastern, and you can see both came up a little bit short today. So what did all that mean for the bond market? Well, let's take a look. And as I mentioned earlier, you can see that they are, we've got a really nice pop to the upside here just over these last couple of days, with the 10-year Treasury yield now battling up against 2.75%. I would watch 280. I think if we get that breakout above 280, that would be very bullish. All right, let's go on into earnings. And on the earnings front, you can see a number of stocks beat. We got VMware, Marriott, Workday, Autodesk, Splunk, X-Ray, Foot Locker. Every one of those stocks beat on the bottom line. We're not getting necessarily bullish reactions to all those reports, though, and we'll go over those in just a moment. But overall, I would say based on the numbers I was looking at, I thought the reports mostly were pretty good. In fact, I think Marriott was the only one of these stocks that missed on the top line, came up short on revenues. So let's take a look at what's going on the charts. I'm going to get into the earnings charts in just a minute. But first, I did want to bring up Walgreens Boots Alliance, because this is a stock that is really putting some pressure on the Dow today. You can see this move. Let me get an update, make sure we got the latest. But you can see the stock down very, very heavy today, down more than 5.6%. And I got to tell you, looking at the chart, if you use this relative chart, you can see that the drug retailers were doing very well until about the middle part of December, when the overall market fell apart. And this group really tumbled back in December. And when you look at the recovery, you might say, well, yeah, but Walgreens Boots Alliance was bouncing back. Well, I think it's a case of a rising tide lifts all boats, because if you look at it on a relative basis, the stock relative to the drug retailers was not really bouncing in January. And if you look at it relative to the S&P, we had already moved to new lows even before the news came out today. And by the way, what happened today is WBA had their price target lowered by Baird, a brokerage firm. They also talked about reimbursement headwinds that they were facing, and also deflation of generic drugs. So it was really a trifecta of bad news today for the stock. And so not only are we breaking down here on an absolute basis, but technically and on a relative basis, this stock really hasn't been looking good for quite a while. And with the group itself breaking its uptrend, that occurred back in the second week of December, it's really put a lot of pressure. I mean, this has been a bad performing stock within a bad performing area of the market. So not a good combination there. All right, let's take a look at some of these earnings reports that came out. First, I'm going to pull up VMware, and I'll also show you these relative charts so we can kind of get a sense of what's happening here. You can see VMware has been one of the strongest stocks over the course of the last 2.5 months. Since that December bottom, which, by the way, held the October low, many stocks broke down below those lows. VMware did not. And then quickly, early January, was breaking back out to new highs. So when they came out with their earnings today of $1.98 versus $1.88, and they beat on their top line, $2.59 billion versus $2.50 billion, we shouldn't really be too surprised. This is a company that's part of the software group, which has been very strong. You can see that VMware relative to software stocks has been strong. So you've got a very, very strong group relative to the S&P, and you've got one of the strongest stocks within the group. So yes, this is a stock that I would have anticipated strong results for, and we got those results. Stock gapped up, might just be a little bit overdone. The stock really has had a huge move here in February, rising from about 150 up above 180 today on the high. So you're talking about a 20% move in a month, and that's on top of already having broken out. So I think the stock might just be setting up for a little bit of consolidation, but I think VMware is a great stock going forward, and a pullback would likely set up a great entry. I mentioned also Marriott at the beginning. This is the one disappointment, I would say, because they did miss on their top line, $5.29 billion versus $5.57 billion expected, but they beat on the bottom line. Unfortunately, they guided fiscal year 19 earnings per share lower. You can see the stock was getting hit hard earlier, but what this chart is telling me is that a lot of the bad news was already built in. If you look back, the stock in June was trading at 140. By the end of December, it was down to 100. And so I think that it's done. It's already baked in a lot of the bad news. And the fact that we were able to pull back and hit this area of support, which was around 122.50, also approach that 20-day moving average, and then bounce off of it to the upside, I think that is very, very bullish action, given the not so great news. Now, when we take a look down at its relative charts, you can see, first of all, it's part of the hotels group. And I've been talking a lot about hotels improving of late and showing a lot more relative strength. And you can see that here with the absolute strength. But then you can also see Marriott on a relative basis is trading close to its high versus its peer group. Now, it's backed off of that just a little bit here in the last week, but it's been a pretty good performer. Relative to the S&P, it also broke this downtrend. And the reason for it, we're finally starting to see some relative strength in the group. So the group is beginning to outperform the S&P, and the stock has been one of the best performers within the hotel group. So I think this is a pretty good stock, and considering it had to deal with some bad news today, I think the reaction is pretty bullish on Marriott. A couple of other big names, at least in the technology space. You can see in software here, Workday. Stock went down, tested its 20-day moving average. I wouldn't be surprised to see it bounce later today. Really good report. They beat on their top line, $788.6 million versus $777.6 million. They beat on their bottom line, 41 cents versus 32 cents. And you can see the stock gapped up early and then sold off, went down, tested the 20-day moving average, some recent lows in the upper 180s, and trying to rebound. A nice finish today would be bullish on Workday. Autodesk, ADSK, also beat top line, beat bottom line. They offered some mixed guidance looking forward, and I think that might be weighing a little bit on the stock. But this is another one that's in that software space, and until the last 2 or 3 weeks had been very strong on a relative basis. I think overall Autodesk looks pretty good. It's outperforming the S&P, and of course, as I just mentioned, software, one of the best areas of the market to be in. But after gapping up, it's gone down, got very close to that 20-day moving average, now trying to bounce off of it. So at least finding some buyers there. Splunk. Always love this name, Splunk. I'm waiting for him to have like a I'm waiting for him to have a spinoff, Mary Ellen, where maybe if it doesn't work out, they can just call it Splat.
That's a good one. I like that.
I don't know, SPLT, Splat. Anyway, after gapping up today, I guess this one could have changed its ticker symbol to Splat because it's been coming back down ever since. But this is another really strong performer. I really don't mean to joke about this. It's been a great company. They beat on their top line. They crushed their revenue estimates, $622 million versus $563.8 million. They crushed their bottom line, 93 cents versus 76, and they guided their fiscal year 20 revenues higher. So I think some of the selling is, the market gapped up and everything kind of sold off. I think that's kind of building in here or being built into what's going on with Splunk today. But good numbers, and I think in the end, that's what really matters. X-Ray, Dentsply. This one was one of the top performers in the S&P 500. Definitely been a big mover today. It is struggling, trying to get through gap resistance that was created from the gap down back in August. So this gap is nice, but can we close up above about 48.25? I think that's something to watch for. And then Foot Locker, another one that came out with really good results, but also sold off after the open. Great numbers. They beat on the top line, $2.27 billion versus $2.18 billion. Bottom line, easy beat, 156 versus 140. Gapped up, pulled back, but so far after consolidating for several months, I view this breakout and this earnings report to be very bullish. Part of the problem for this stock has been that the apparel retailers went into a tailspin back in November and December, and their reaction to the upside has not been very good in terms of trying to get back to those prior highs. But Foot Locker's been one of the best performers within the group, which even though the group has been weak, and here you can see how weak the group has been relative to the S&P, Foot Locker is still breaking out to a fresh relative high versus the S&P. So that kind of gives you a signal of the underlying relative strength in Foot Locker. All right, Mary Ellen, I know you got a few upgrades, downgrades, so I'll turn it over to you for those.
Okay, yeah. So interestingly, today I'm going to be sharing some upgrades and downgrades, of course, but I did make note of the fact that this week there are an awful lot of downgrades, and it's not necessarily downgrades as far as it's just from outperform to neutral, overweight to neutral. So we're getting a sense that as far as from analysts' point of view, that the markets may be heading for a little bit of a pause. Of course, the markets will show us their hand, but let's go ahead and start with some of these upgrades. The first one we're going to look at is a stock that has been in the news quite a bit over the last week and a half, and that's, of course, Kraft Heinz. KHC is the ticker symbol, and this particular stock has been upgraded, and it from a sell to a hold. And let's see if we can bring this screen down a little bit more. But what I did want to show you is just really how deteriorated this particular stock had gotten, and it is starting to turn. And hopefully you can see my screen here. We can take a look at another stock that was upgraded by Goldman Sachs, and that's SRCL, Stericycle. These guys are from a neutral to a buy from Goldman. And these guys, I'm going to see if I can bring my screen down a little so that we can make sure you guys can see the full display here. And so this particular stock, a lot of these that we're looking at are really kind of down and out and are starting to potentially turn in here. Let's take a look at another upgrade. This is a company that just reported.
Hey, Mary,
yes.
I'm sorry, but it looks like those charts are just a little bit big.
They are, and I apologize. I am going to see what I can do here as far as bringing that down just a little bit. And because, of course, we want to be able to get over to that area where we can get a better feel for where the stocks are currently. So what I would like to do is...
like a width of 1260, maybe something like that.
Sure. Thanks, Tom. See if that helps the cause here. Yeah. Good job. Okay, perfect. So this is JD.com, and this gap up here yesterday was on earnings, and the markets like it. It's now being from an underperform to an outperform. We can see that nice breakup above that 200-day simple moving average. And yesterday's gap up was on volume. So this is a very constructive looking chart. We can look at one last upgrade, Expedia, EXPE, from a hold to a buy. It does look a bit trapped in here. A lot of the other travel advisories are, TripAdvisor had a bad week. And so not quite as constructive looking, but they did have an upgrade today. We can go ahead and move on to some of these downgrades. And what I'm going to be highlighting are some of many that popped up. But the first one is JOBS 51 job from an outperform to a neutral. We can see the stocks dropping about 2% on that news, but buyers are coming in and supporting the stock on the dip, but we are still below that 200-day simple moving average, so not quite constructive looking. The next downgrade was from an overweight to a neutral. This is Bili, B-I-L-I. This one's getting hit a bit harder, down 4% on the news. It's breaking down below that 10-day simple moving average. RSI poised to potentially turn negative. And we can see the MACD black line potentially crossing down below that red. That's not what we want to see. And then PRTY, this is Party City. This is another stock that was downgraded. And from an overweight to a neutral, and it's all about earnings. They came out with numbers, very disappointing. Analysts added to their demise, if you will, by downgrading the stock, and we can see the RSI is now negative, broke below these key moving averages on big volume. So this stock does not look positive. And then one last one that we can take a look at here that was a downgrade from a buy to a neutral. This is Curtis right. And we can see despite the drop, it's down about 1.5% today. It's still finding support at this upward trending 50-day. Your RSI is still positive. All of these are daily price charts. MACD is positive. So really, we're still in a confirmed uptrend despite the downgrade. So that's it for upgrades and downgrades for today. We can certainly go ahead now and move on. And Tom and I are going to review what's hot and what's not. And a lot of the focus here is going to be on stocks throughout this current week, and then with an eye, of course, toward longer term as well. And I will tell you from a lot of the going through any number of charts and looking at a lot of stocks, a lot of the action this week, as far as the most profound or the biggest movers, were certainly small caps. A lot of action. We talked about bubbling activity going on below the surface. Small caps, lots of action there. So this first stock that we can take a look at, I'm going to be reviewing within technology, are some of these smaller software stocks. And we can take a look at some of the bigger movers here. The first one that we can look at is a $300 million, it's called Rubicon Project, RUBI. So take a look. It's up another 5%. So it's up about 20% for the week. And this is all about earnings, 100% year over year earnings growth. And they were 160% above average. Another software stock, because software stocks really have been quite strong and very sound reasons. These guys are coming in with strong numbers, a lot of demand for their products. This next one is certainly a lower price stock. You can see it's at about $4.50. It's XNET. And this is an ADR. They're based out of China, and it's a $300 million stock, company. But take a look at this nice turnaround here. We can see that the stock, prior to their earnings release, broke back up above that 50-day simple moving average. We have an RSI that's positive, MACD up into positive territory. So we are potentially reversing this downtrend. And of course, from my work, you're going to want to see how the stock behaves at this 200-day simple moving average. If it continues to advance, it could very well find resistance there. STMP. Now, this is a stock that Tom and I talked about last week because they did get hit. Take a look at that gap down. That has everything to do with stamps.com. They announced the break off of their allegiance with the U.S. Postal Service. This week, it is bouncing a little, but we can see it's giving some of that up. It's up about 10% on the week. And you'll see that when these stocks have these huge drops, buyers will come in trying to find a bottom, but we're still not out of the woods yet, even though we are oversold. That RSI below 30, we can see that the MACD still has work to do before turning. So despite the bounce this week, we're still not out of the woods with STMP. VHC, this is another stock that is about a $400 million, but it's a beautiful looking chart. Vernex Holdings, and the stock is poised to break out. It's up probably now about 6%. It's giving up some of its earlier gains. But what I'm looking at here is this saucer-like base, the potential for this stock to break out. It's another low price stock in the $6.50 range. But again, technically very attractive looking. The RSI is positive, and we had that nice black line up through the red, positive crossover of your MACD. And then certainly another one that we can take a look at within software, SCWX. Let me just make sure I get that ticker symbol proper. And so this is a software security stock, and another one that caught my eye because of this potential formation of the right side of a base. The company, they did report their earnings a couple of weeks ago, but they did have a nice pullback here, and again, potentially forming the right side of the space. Your RSI is positive. Your MACD, the black line, is poised to trade up through that red, which would be even more constructive as the stock continues to climb. Today, it's up a bit despite a generally negative broader market. And then one last software stock is AWRE. And again, another lower price, but just really pointing out to you the action. This is a $100 million stock. It does appear poised to reverse this downtrend, but I will tell you it's not very actively traded. So we can certainly move on. I'll quickly share some other tech names such as internet related, FENG. This is Phoenix New Media, and it's a Chinese ADR media company. Stock is up about 33%. So take a look at this big gap up. They announced that they're going to be selling a portion of a stake in a company called Particle. It's a fast-growing personalized news app, and the markets liked it. We can see that gap up. Stock is up here. The RSI is in overbought, but it's really hanging in and keeping retaining that nice gap up. MACD is up there in black line up through the red and in positive territory. And only have time for probably one more stock here. And we can take a look at within the communications. This one, I was recently on an airplane and wanted to use the internet. So as such, I had to purchase GoGo, G-O-G-O. That is, they're down a bit today, but the stock was up. It's probably up about 6% for the week. And the company did come out with earnings. They did report a loss. That was on probably about a week ago. But they came in, revenues were ahead of estimates. The company announced that they an allegiance with Alaska Airlines. So I'm pointing this out because we could potentially see a bit of a downtrend reversal. We want to see a decisive break up above that 200-day simple moving average. RSI is up there in positive territory, and the MACD is hovering up here positive. So again, a break up above there on any kind of volume would be quite constructive. So Tom, I think you might have some interesting things to talk about within healthcare.
Actually, financials.
Financials, pardon me.
Here, I just wanted to show first the sector summary for the last week. And you can see that financials have been the best performer over the last week with a slight gain. It's been a mixed bag, really. I mean, we've seen ups and downs, and that's what Mary Ellen and I were talking about earlier. But I thought I'd focus on some of the areas within financials. And if we pull up a one-week chart, you'll see specialty finance, financial administration, investment services, and consumer finance all up more than about 1 2/3%. So this is the area within finance that, or within the financial area that has been strong. So let's take a look at some of the stocks within this space that I think are certainly worth mentioning. First, I'm going to start with Square. Now, they came out with earnings the other day, and the earnings, weren't a little bit of a warning in there. And I know initially traders were not excited about it. You can see the pullback at the open yesterday. But after that week open, there were a lot of buyers coming in on Square, and the stock actually made a breakout to multi-month highs. It has pulled back a little bit today, maybe a little profit taking with that big move yesterday off the low. But overall, Square has had a pretty nice move this week, helping those financial administration stocks to move a little higher. Within the investment services area, you've got Intercontinental Exchange Group, ICE. Beautiful move up this week, just about every day. I am a little concerned today about this false breakout. We haven't been able to get a close above 78 over the past 2 to 3 months. And you can see here we did have that level earlier today, but now we're trading near the low of the day. So off of this move to the upside, if we can't get this breakout above 78, that could put a little bit of a problem, could be a bit of a problem here in the short term for ICE, but definitely it has had a very nice week. Also within this space, we can take a look at CME, which is CME Group, and the last 4 or 5 days have been straight up. We did break this downtrend line, the short-term downtrend that we had going for about 4 or 5 weeks. That was nice, getting back up through the 20-day. So I'm seeing a character change here on this chart, and what will be most interesting is on a pullback on CME, can we hold that rising 20-day moving average? Because if we are beginning an uptrend, that rising 20-day should be able to offer us up some really nice support. ETFC, E-Trade. This one's trying to battle through the resistance established from the high in the 3rd week of January. So I'm going to say about 50.60 or so. Today's high, 50.54. So we're almost there. Stocks had a really nice week this week, continues to push up, trying to break the overall downtrend that's been in play. The first step would be to clear this $50.60 level. Let's take a look at specialty finance. Here's one that has had a very nice week. This is MSCI, increasing volume. And literally, once we broke out of this flag, you got the flagpole here, flag sideways for a couple of weeks. Once we made that break and the volume was there, you can see a lot of buyers jumping in. This is a stock that over the course of this week has jumped from the mid 170s up above 190. So MSCI, certainly one of the top performers in the specialty finance area. Within consumer finance, Capital One trying to make a breakout, but kind of like that E-Trade chart, and I think it may have been either ICE or CME, but trying to make this breakout, and so far not liking this candle. This is a gravestone doji for those of you who are candlestick fans, where essentially you've got a gap up, you trade it up intraday, but you come all the way back down near the open and left this long tail to the upside. That is generally a bearish candlestick short term. I'm not talking about a long-term problem, although we are still in this downtrend. So a failure at this reaction high could be a problem longer term. But short term, the fact that we are getting this failure would make me a little nervous, but doesn't change the fact that COF has had a really nice week. SYF, this is Synchrony Financial, another stock. This was a gap up back in January, went sideways for a while, broke out. You can see the volume expanding the last 3 days as it makes new highs. Synchrony has been one of the top performers within consumer finance. Asset managers, how about T. Rowe Price? T. Rowe Price breaking out. Sideways consolidation here for the past few months, but getting back up above that December 1st high, also getting above the November high, and trying to get back up above this mid-October reaction high. I think a close over 102 would be very bullish for T. Rowe Price. Short of that, if we fail here, pull back, watch that rising 20-day moving average. Among banks, a couple of banks, Deutsche Bank having a really good week this week. Stock was at about 8 3/4 to start the week. Now it is up to 9.32, and it is clearing these reaction highs that we've seen over the past couple of months. So I think Deutsche Bank looking pretty good. Barclays, BCS also having a strong week. It's pulled back the last 2 days, but big gap ups prior to that, and we've seen some outperformance from Barclays. Bank of America is one of my stronger stocks in this space, one that I really like, mostly because of this earnings push to the upside, heavy volume. They beat top and bottom line. You can see when they've pulled back, they have held gap support beautifully, now trying to negotiate overhead resistance at 29.50. Property and casualty insurance, Travelers, TRV, beautiful move to the upside, sideways consolidation the last couple of days, but a nice week for Travelers. And then my last stock is in the life insurance group. Let's take a look at AIZ. This is Assurant Inc. And after sideways consolidating here just above the 20-day moving average, this week we have broken out. Stock has run from about 98 up close to 104. There is some overhead resistance at this area, so I wouldn't be surprised to see a pullback. But overall, I think many of these stocks within financials starting to show a lot of life here, Mary Ellen.
Yeah, they are actually. And I noticed you only covered one bank, but I will say this week, a lot of investors with those banks are going to look at those yield spreads. And this week in particular, we've seen a nice 5 basis point uptick. We're back to January levels as far as the widening of that spread, which would benefit those banks. But interesting. We always want to see financials participate, of course.
Yeah, I mean, one thing, and I've talked about this before too, when the financials are participating, especially when you get banks participating, they don't have to lead a bull market, but you want them to participate. You want them to be healthy, because we are a credit-driven market and society, really. And so the banks with their, we want them opening their pocketbooks and lending. And when they're strong, it's generally a pretty good sign for our economy.
And speaking of strong and spending, shall we move into retail and some of these consumer names?
Sure, go right ahead.
That are hot? Yeah, let's go ahead and do that, because as some of you may know, during earnings season, and we're certainly toward the tail end, but these retail and consumer related stocks, these guys are the last to report. And so we are seeing a lot in the way of earnings reports this week. So typically those are going to be your bigger movers. So let's take a look at a couple of the retailers that came out this week. We can take a look at VSI. That's a Vitamin Shop. And again, another potential try at a turnaround. And the stock is up, you can see, about 34%. They did come out with numbers this week. I'm going to pull this up. And we can see their earnings really were well below last year. But the reason for the rally, this peak to trough is about a 50% decline. And all of this has to do with competitors coming in. There were consumers that were questioning the validity of some of their products. So it really did hurt them. But they've since been trying to turn around here. The company launched a delivery service. They recently signed a contract to supply supplements to the U.S. Navy. So they are potentially turning around, but a lot of this too is a short squeeze. So for those of you that follow that, you can, if a lot of short sellers are in there, they come in with some kind of promising news, the stock will gap up. So that 34% is quite a nice move, but we still have potential upside resistance here at this 200-day simple moving average. We can see on this daily chart, the RSI is up above 70. So that's indicating overbought. But on the plus side, we have this moving average convergence divergence just now popping up above that net neutral into positive territory. So I would need to see a break above that 200 before getting constructive. Another one, a lot of these departments. Oh, I'm sorry.
That's all right. I'm sorry to interrupt you. I just wanted to see if you could type your symbol in up under that next to sharp chart at the top of the screen.
Oh, you bet.
I think that might get your default charts and they might show up a little bit better because I think it's still a little big. No, that's not
actually
working.
I think the other way was
the other one was better. Never mind.
Okay, no worries. And so what did we have down here?
We had
1250.
Yeah,
perfect. Okay, no worries. So a lot of these, here's JCPenney, and there are a number of these big department stores that are really popping. The stock, you can see really how depressed it's been, but JCPenney came out, talked about positive holiday sales. The stock gapped up 24%. And management came out and said that they expect to see positive cash flow this year. So the market's like that. But we are still, from my work, very much in a confirmed downtrend. We still have work to do. Again, a breakup above that 200. But you do have a positive RSI, positive MACD. We could rally a little bit more, but we are talking about $1 stock, so not one normally that I would want to traffic in. But one of the bigger winners in the consumer retail space this week is Etsy. And this is a stock that came out with numbers. Take a look at that big gap up. It's up about 28, almost 30% for the week. They came in with earnings and sales that were above estimates. For those of you not familiar, this is a platform that allows craft makers to sell their goods, very high quality. And they came in with 113% year-over-year earnings growth, 50% ahead of estimates. So we had this nice gap up, but the beauty is that it's not giving any of it back. And we can see this big volume on that gap up. That's super constructive. Currently, the stock is a bit overbought. It's up above that 70, but it can remain there. Take a look back here. It can certainly remain there for some time. Your MACD had that positive black line up through the red and is constructive as well. So we could even see yet a bit more on the upside here. Another department store that we can take a look at is Dillard's, DDS. This company is a bit more private, so they're not a lot of public information, but they did come in with good numbers. The stock gapped up about 28%, but I would not, even though we had that break up above that 200-day, this type of volatility would really have me looking elsewhere. I like to buy and look at stocks that are a little bit more orderly in their movement. But we certainly, over the near term, had that nice constructive break above on volume, but it's giving back a bit of that now. One last department store is JWN, good old Nordstrom. And these guys are not up quite as much. It's up about 7%, but it is all about earnings. Their results were mixed, but investors were a bit heartened by some of management's comments. Their digital sales are increasing. They're making some changes. But again, these types of gaps down, volatility, we're still suffering down here below that 200-day. So not a stock I would touch, but certainly worth noting that they've had a good week. And so see if I have another minute or two to take a look at some of these consumer stocks. We can take a look at MNST. That is Monster Beverage Corp. And these guys are all about their energy drinks. They came out with earnings. They're popped about almost 10%, but their earnings and sales were ahead of estimates. They had record sales for 2018 as these energy drinks still are quite popular, and they are going to be introducing new products for next year. But more importantly, we can see this gap up caused this stock to break out of a very long base. That's about an 8-month base. And we can see while the RSI is a bit overbought, again, it can stay there for some time. And these volume that we're seeing on this gap up and the subsequent move is very, very encouraging. Your MACD had that positive crossover. So those are some of the stocks that we can look at there. I'm not sure if I have time for another one as far as some of these food companies that are coming in with good numbers within the consumer staples, but they're still not doing that well. This first one that we can look at is Campbell's, and Campbell's Soup has been suffering. There are certainly this big gap up here was on earnings. The stock was up about 10%, but that said, it's still not in a position at this point to reverse that downtrend. And this is what we're seeing with a number of these consumer staple stocks. This is JM Smucker. These guys came out with numbers, and both Smucker and Campbell did show decent results, but really nothing to get excited about there. There's not any kind of new products on the forefront. A lot of their profits were made by cutting costs, so that's behind them. And we can see they're just kind of waffling here. This is your RSI around that net neutral. While we have broken up above here, above your 200, you could potentially see a bit of an updraft here, but over the near term, it does appear more than anything to be marking time. I think it's going to take some other type of good news to get these guys going again.
All right, you want to move on to the what's not?
You bet.
All right,
yeah.
I got a couple. Well, first thing, I'm gonna go ahead and show one thing that is starting to get hot, and it's causing some other things to be in the what's not category. You can see that the dollar kind of bottomed on Tuesday, Wednesday of this week off that 50-day moving average, and now we see the UUP starting to rally back to the upside. So unfortunately, that is having a negative impact on areas like gold and silver. So here is the GLD, and you can see gold topped over a week ago, and with that dollar starting to strengthen, you can see the weakness really beginning to pick up here on gold. Also, we could pull up silver and take a look at the iShares Silver Trust. Same thing. Big move to the downside. There's a pretty key area of support here at about 1430 on silver. I'm not a big fan of gold and silver because I believe that the dollar remains in an 8-year uptrend. And with the dollar starting to strengthen again, I think that can put a lot of pressure on gold and silver. Now, within the miners space, of course, if gold and silver are going down, some of the miners also tend to struggle. And you can see Anglo Gold. This has been one of the best mining stocks out there. Stock broke out recently to a new high, nice volume. Only problem was we had these continuing negative divergences. Each time we went to a new high in price, we had a lower high on the PPO, and now we're coming back down, failing to hold not only the breakout level, but also failing to hold this rising 20-day moving average. I think that could be a problem. If we can't hold price support down closer to the 1310 area, that would also mean we're losing the 50-day moving average. A lot of these stocks have been very good in the short term, but knowing that that long-term trend higher is out there on the dollar, I would make sure I have my stops in play in the event that these stocks start to break down. Another one in the space, GFI, also has been weak, starting to strengthen to the downside, or weaken to the downside, down almost 4% today, also threatening to lose its 20-day moving average in addition to the area of the breakout that we saw on big volume just about 2 weeks ago. One final one in this space, Kinross Gold Corp, or Kinross, sorry. Kinross Gold Corp topped also very strong volume into the middle part of February, but you can see the overall pattern over the past, I don't know, 6 to 8 trading days has been down on many of these stocks. And with that dollar strengthening, it's going to be hard, I think, for these groups to, or these stocks to make a move back to the upside. Within the commodity chemicals area within materials, we have RYAM, which is a Ryanair Advanced Materials. Last 4 or 5 days after trying to make a breakout, you can see the negative divergence, lower PPO, higher price, false breakout, and now the selling's begun. I think we're going to make a move back down here to test this 50-day moving average and this price low, and we'll see whether or not that holds. Olin, OLN, this is Olin Corp. Another one, last 4 or 5 days, very weak. Possible breakdown. Volume is not light today, so watch to see if we hold this rising 20-day moving average. And I'm only going to mention this one very quickly, Dow DuPont, because it will be our first 10 in 10 stock. But you can see Dow DuPont also struggling, rolling over and weakening after getting up close to an overhead resistance area just above $56. And then the last what's not stock I had is in the steel space. Cliff, this is Cliff's Natural Resources, CLF. After topping back in the second week of February, we've been seeing some weakness. And once again, can we hold this 20-day moving average? I don't know. If we fail to hold it, again, I'd be careful with the strength that we're starting to see in the dollar. And I know you've got a couple more to add to those what's not. Mary Ellen, what do you have?
Yeah, you bet. So what I'm going to do is really touch upon and highlight some areas of the market that were hit last week. So some of you may have noticed that certainly within healthcare, there were some areas that got hit. That last week there was a reintroduction of a Medicare for All bill. This really alarmed a number of investors. So one area I did want to take a look at is some of these healthcare plans. So what we're looking at here is Humana. And these guys do, of course, provide, they are insurance providers, and we can see this gap down. Now, the stock really was not quite that healthy going into the news, but that's a significant drop. We'll take a look at just a couple of other ones very quickly, because some are going to be impacted more than others, but this is WellCare health plans. We can see that drop and is continuing to decline on that fear, if you will, although experts really are saying that it's not going to pass the Medicare for All, but that is not diminishing investors' concerns. This is UNH, United Healthcare, a big Dow component, taking a look at that gap down. And one other area that I did want to point out as far as having stocks that were dropping this week is some of these home builders. And we can take a look just again here, looking thematically. We can look at a couple of examples. KBH is one. There was a report that came out. Now that's not looking as bad, certainly, but the stock is pulling back a bit. Pretty much every single one of the home builders did see declines. And it's interesting this week to see, today, that some of these are finding buyers on these dips. So it will be interesting to see how they close the week out. We can take a look at DHI. There was a report that came out, talked about a housing bubble and the fact that these builders are going to be struggling. But again, take a look. The stock pulled back here. This is DHI. DR Horton on the daily, and the stock pulled back to this 50-day upward trending simple moving average, and buyers are coming in. So that's really quite interesting to me in the sense that this dip is being bought. So that is actually constructive for some of these stocks. And one last one here, BZH, Beazer Homes, again, a daily price chart, and another one where it's pulling back right to that 50-day simple moving average, and buyers are coming in and supporting these stocks. So sometimes when you see these fears, some of the analysts, if we go back to United Healthcare and some of those healthcare plans, there were some Wall Street analysts that were suggesting that you buy on the dips. So let's just take a quick look, and I can share with you what I would look for as far as that potential if you are inclined to do that because technically it's now broken down below all of these key simple moving averages, but we can see the RSI potentially bouncing. I would need to see it cross up above that net dash neutral in line and in conjunction with a break back above these key simple moving average in line with a MACD positive crossover. So we're still quite a bit of ways from that occurring. But potentially at some point, these insurers are going to be viewed as good buying opportunities. So we can leave it at that.
Yeah. Well, I tell you what, we went over a ton of stocks. I don't know how many we were able to get through, but I think we certainly gave a lot of the highlights from the last week in terms of what's hot, what's not. Many of the areas that we covered, you can see are up on your screen right now. And so I think what we'll do is move on into the 10 in 10. So
very good.
Let's start with Dow DuPont. And again, I just mentioned this a second ago, but I'm going to give you the annotated chart, the annotated version here. And you can see Dow DuPont. First of all, we gapped down very, very heavy volume back at the end of January. This was earnings related. And after you gap down here to about $54, notice there were buyers that came back in that sent the stock back up to about 56.75 or so. And then the sellers kicked back in again, and we closed all the way back down near the low. Now, when I look at this, I think to myself, okay, that is where selling began. 56.80 or 56.75 at that top with heavy volume, that's where the sellers came back in. So when I see a stock like that get back up to that area or close to that area, we should at least be thinking, hey, that's where selling, big volume selling kicked in last time. Probably shouldn't just assume that it's going to go right through there, and it did not. We got close to it, and this week we just kind of turned back to the downside. So I think we got problems here with Dow DuPont. It's a great company long term. I don't have an issue with it long term, but in the near term, it's in a weak area of the market. I think that this is a group, and we can pull it up on a relative chart, and you'll see the relative weakness that I'm talking about. Yeah, here we go. So you've got the commodity chemicals group, which is starting to show a little bit of absolute strength. I wouldn't exactly say that it's flying. I mean, the overall market's been really good. But when you take a look at how it's been doing relative to the S&P 500, you can see we're turning lower again, and we're not far from breaking to a new 52-week relative low. So Dow DuPont resides in a very weak part of the market. And when you look at Dow DuPont relative to its peers, it's breaking to a new low. So you have one of the worst areas of the market, and you have one of the worst stocks within it. That doesn't mean that Dow DuPont isn't going to be a great company and at some point begin to strengthen and trend higher and become a great short-term trading candidate. But for me, as being a momentum trader, this is the kind of stock that I would avoid until it begins to show some relative strength. So, just kind of going off of that theme, we have multiple tops coming in here at $60. We have the recent low down at about 48 and change. And we know we're in a downtrend, and we know that the money has been rotating away from this stock and away from this space. So I'm not interested in it. I'd have to wait to see maybe it'll consolidate for a few more months and then eventually get that breakout above 60 and start to show relative strength. Then I would become more interested. In the meantime, I would avoid a stock like this.
Very good. And then we have CGC, that's Canopy Growth Corp.
Great, CGC. Yeah, I mean, I think we're in a nice little flag here, maybe even a symmetrical triangle. So let me show you what I'm looking at there. First of all, for these continuation patterns, you need to have a trend in play. There's a clear uptrend in play. So then you're looking for some kind of a continuation pattern. And for me, that could be a cup and handle. It could be an inverse head and shoulder. It could be an ascending triangle. It could be some kind of a triangle. And I think that's actually what we have here is kind of this a symmetrical triangle, not an ascending triangle, but a symmetrical triangle where your highs are moving lower, your lows are moving higher, and you see this squeezing. It's almost like a piece of pie off of an uptrend. What you would expect when you see consolidation like this is ultimately a breakout above this up or down trend line. I think that this consolidation is doing what it needed to do. We were extremely overbought, had an RSI up in the 80s. We had the PPO above 10, which is crazy. That means your 12-day moving average is more than 10% higher than your 26-day moving average. That's hard to do. It's hard to get it to that level. And you can see what happened when we got to 15%, when we went straight up here. And look at how the stock struggled for a while and then eventually broke back down. Well, that we needed some consolidation to kind of unwind this momentum that was just too strong to the upside. I think that's what this triangle has done here. So let's see which way we break. And then I think that'll give us more clues on the stock.
Very good. And then Cisco, CSCO.
Yeah, this is one of my favorite stocks in the market, actually. It's a big company. Today, bearish engulfing candle might signal a little bit of weakness in the near term. We'll have to watch. But longer term, I really like Cisco. They came out with strong earnings. They broke out above their prior tops. They're in a very strong group. I actually think maybe Sienna could be even better looking in this group, but I'm going to pull up that relative chart for you. So here's Cisco breaking out. Here is your telecom equipment group breaking out. And you can see Cisco is one of the top stocks within the group. So the group has been very strong. There's your absolute strength. Here is your relative strength of Cisco versus the S&P. And here's your relative strength of the group versus the S&P. So this is really kind of what I look for when I was talking about what I didn't like about Dow DuPont. I think that here, this is exactly what I do like. I like to see a stock clearly breaking out. Then you've got the group breaking out. You've got the relative strength of Cisco versus its telecom peers. Clearly an uptrend versus the S&P, and the telecom equipment group performing very well versus the S&P. So if you want to beat the S&P 500, you want stocks that are among the strongest in groups that are among the strongest. And that is the way, in my opinion, you have a better shot to beat the S&P 500. So I love Cisco. I think a pullback to test that rising 20-day would be a great entry point.
And they're due to report next week. Qualcomm, QCOM. I'm sorry, Sienna is due to report. Forgive me.
Yeah, I thought, yeah, Cisco.
You mentioned Sienna. It's stuck in my brain.
Yeah. I'm sorry, what was the next stock?
Qualcomm, QCOM.
Well, now I'll tell you a stock that you pretty much want to stay away from. In the same space. Now look at the chart. Look at Qualcomm versus what we just looked at on Cisco, and look at the stock. Now, maybe there are bottom fishers, value investors out there that are looking for this, but that's not me. I am a momentum trader. I'm looking to outperform the S&P in the short term, and I don't want to sit back and wait for the value to be discovered by Wall Street. So a stock like this, where you've got the group breaking out and the stock, one of the worst performers in the group, and leading to underperformance versus the S&P 500, and yet you're in one of the strongest areas, for me, it just makes a lot more sense to invest in a company that is among the leaders in the space rather than trying to catch the bottom on one of the laggards. So here is what disappoints me on this chart: the actual price movement, and then really showing such really poor relative strength versus the telecom equipment group makes it really difficult for me to suggest Qualcomm as an investment or a trade at this point. So I'm going to pass.
Okay. And the next one is Walmart, WMT.
Yeah, Walmart, I think, looked pretty good. They popped with their earnings. They pulled back, but I think they're right on their 20-day moving average. I have no problems with Walmart at this level. It's in a good space. It's rallied nicely the last couple of months. Walmart's just kind of going along for the ride. You can see it's performing along with the S&P 500. It's not a leader at this point, but it's sideways consolidating on a relative basis after showing a lot of relative strength. So I'm okay with it. I think it's consolidating, and I fully expect we're going to see another breakout. So as far as annotating this chart, I would be looking at the 20-day moving average. I think this is going to be a great area on the stock. I'm not sure why that is doing that, but here, really nice pullback, orderly pullback, back to the 20-day moving average. First time we've had that since we gapped up with earnings. I think it's going to make another run for the November high right here. So I think it's going to run from 98 up to about 105, and I think it will do it sooner rather than later. I like Walmart from here.
Very good. Tandem, TNDM.
And this is in that healthcare space. This has been a tremendous performer.
You're right.
Yep, gapping up and moving. I think this was one we talked about maybe back in January at some point because it looked like it was finally breaking this consolidation and starting to move up. And you could see the volume beginning to pick up the first, second week of January. And I think that was the first sign that it was beginning to resume that prior uptrend. So I think the breakout of this downtrend line, sideways consolidation, another breakout. Look at the volume pick up when you get these breakouts. And then this was earnings related. Stock just gapped up with big earnings, up above 60. Now it's almost to 70. It's hard to chase these stocks when they're this high, but this is one that I would keep on my list. I think that this sets up exactly with how, with what I would want to trade. And again, I want to look from left to right on these relative charts. And what I want to see is just constant movement to the upside.
Mm-hmm.
And when I see this, I know I have one of the best stocks in one of the best groups in the market. And that makes me feel better about holding a stock like this, for hopefully future gains. So I think Tandem's been a great performer, continues to be. I like it. I would just rather see it on a little bit of a pullback rather than try and chase it here.
Very good. And then we have NVIDIA, NVDA.
Yeah, NVIDIA has been lagging its semiconductor peers. Waiting to see maybe if we could get this breakout above 170 or 175-ish. That's been the reaction high. And so I like the semis. I think the semis have started to show some relative strength. I think that's good. But I'm having problems with going with NVIDIA at this point because of its inability to lead. It's been lagging. So it's one that's been beaten down. So again, maybe from a value perspective, it's ready for value investors, but I'm just not seeing the relative strength in the stock that I want to see. And considering that semis have actually started to show some life, I'm a little disappointed that NVIDIA hasn't really participated. So I'm going to continue to watch this one, but I think it's too early to jump in.
Very good. And then LOCO, Loco.
Yeah, this is in the restaurant area, and it's trying to settle down. I'd like to see it hold this 1450 level. It was one of the leaders in the space, and then during this selling and consolidation, notice we keep failing at that 20-day moving average, and also we're holding on to support at around the 1450 area, and then we could even go back down a little lower. This was a top back here, and the bottom here. That lines up around 14. So I think the problem is we're squeezing right now on the stock. Multiple tests. I could draw a lot of arrows here, but you're going to get the point. The 20-day moving average has been very difficult to negotiate. So until we do that and get back through the 20, I would wait on the sidelines. If I had to enter, if I was really looking for entry, I'd either enter on the breakout above the 20-day or I'd wait and try and get it back down here between 14 and 14 and a half.
Okay, ALRM, another software stock.
Yeah, and I think they either just reported or getting ready to. I think they just reported, didn't they?
They did, actually.
Yeah, my guess is they had a negative divergence. I looked at their report, and I thought they beat. I don't know if you have those numbers, Mary Ellen, but I thought they had
Earnings were in line. Their sales beat estimates.
Okay. I think they're just testing support. I actually think this pullback is an opportunity. It's been a pretty good performer. Here was the top that we saw, double top, September and October. We broke out. I think today we went down intraday. If we close back over the 50-day moving average, I think maybe it puts in a short-term bottom here. But if it moves back below today's intraday low, I would be careful with it. It is in a great space. We've talked about software, but the one thing that I would want to make sure I have my stop in play because we're beginning to see this underperformance. And many stocks that we've looked at on these charts look really good for a period of time, and then they roll over and all of a sudden start underperforming for a period of time. We want to see this start to turn back up. So we want to see this turn up, and we want to hold the 50-day moving average. If we fail to do that, then I would be out of the stock. I think there are too many other software stocks that are performing better right now. But I give Alarm.com a chance here to turn around. I think it's got a shot, maybe put in a bottom today.
Very good. And then TMO, Thermo Fisher.
All right, I believe this is the last one.
Mm-hmm.
All right, TMO, nice breakout. Medical equipment, I really like the medical equipment stocks. I've been talking about this group. I think overall, TMO relative to the group has been strong. I have no problems with this stock. I think this is one that's in a nice area. And for many of the same reasons I talked about earlier, you can see the chart. And on a relative basis, I mean, really, for the last several months, pretty good support, in the group, and a nice rally off of the December bottom in medical equipment stocks. And then finally, just getting this breakout on the stock above $254, rising 20-day moving average, as you can see throughout this uptrend. Each time we pull back to that 20-day, it's been a buy. And that's why when I get these stocks in uptrends that I like and top performers, you hear me say it a lot of times, if it pulls back to the 20-day moving average, that's where I would like to get in because I can manage my risk there. If I jump in here and the stock pulls back to 251 to test the 20-day, I'm down $12 as I'm hitting my first major support level. I want to be getting in when I'm at that first major support level. I don't want to already be down 5% on a stock. So that's why I always bring up the 20-day price support, trend line support, something on a pullback. I just like to buy stocks a little bit cheaper, that's all. But TMO looks good. I like this breakout. Volume picking up over the last couple of days on the breakout. I think we go higher here on TMO. And that was the final stock.
Very good.
10 in 10. So you have those 10 stocks now up on your screen. And we will take a look at the market, get a final update here. And I'm kind of anxious to see where we are. I'm just going to go back to our dashboard for this update. And you can see here the Dow Jones Industrial Average went all the way back down to even and now is starting to rally back again, up 68 points. The NASDAQ up 41, having a really strong day. It never quite went back down to its prior close. And so it is starting to rally again. A breakout above those early morning highs would be really, really bullish. The S&P 500 up 11 in 2/3, also rallying back up, and even the small caps starting to show their relative muscle again, outperforming the S&P today. And I think the market overall looks pretty good here. I did want to just point out that on the S&P 500 chart, and I think this is what a lot of technicians are watching. I don't think I'm the only one, and I know many who we have had on here, and we've talked about it. When you look back, and I'm going to annotate, we're right up against these reaction highs. I think this is a key area, and I don't know how you feel about this, Mary Ellen, whether or not I know you look at the moving averages quite a bit,
Right.
but there's a lot of tops. I mean, each time we saw some buying in October, November, and December, we failed right at about 2,800 to 2,820. And that is right where we're at now. We saw that big reversal earlier today. We saw a similar type reversal early this week. I don't know. What do you think? I mean,
yeah, definitely. You do want to look at those December highs, and each time we potentially break above, you're in better standing. And you're right, we are finding a bit of resistance. The markets are looking a little tired here. Certainly the Dow has been one of the stronger of the broader indices, and that was able to break back above actually its November high. And it's just pulling back because that November high was 25,980. The Dow's at 25,916. But the bigger point is, as you advance above those prior highs, you are in better standing.
Mm-hmm. Well, you're definitely clearing obstacles. I mean, you expect as a trader that that's where selling kicked in back.
Absolutely.
This is where selling kicked in December.
Your overhead supply.
Exactly. So, everybody sees it. So, there are going to be some sellers there. Can you get through, and can you sustain that move? And I've just said this, I expected that when we got back up into this area around 24,250, we would have some problems because that's where we had broken down. I thought maybe on the weekly chart, we would run into some difficulties at the declining 20-week moving average, which was just above these price resistance levels. We went right through that. We went right through the 50-week moving average. And then I was looking at the weekly PPO because if you look at the last two bear markets, we never had a weekly PPO go positive. It's hard to get that kind of strength for a period of time to get the weekly PPOs to turn positive during a bear market, because the bear market, those counter trend rallies don't typically last this long. So I find all of these to begin arguing more for the bullish side, that we're going to break back out to all-time highs. But, you know, you still have to have that one finger on the sell signal just in case, or sell button. And so for me, it's these rising 20-week moving averages. I think they're going to play the biggest role. I agree with you, Mary Ellen. We need a pullback. I'd like to see the Dow pull back 3 or 4%. The S&P, you know, try and consolidate this for a bit and then hold that 20-day and then move back up. I'd feel much better about that kind of a move than to just continually go up week after week, because what it's going to result in eventually, we're not there yet, is very overbought territory on a weekly chart. And that can start to create some sideways consolidation or some selling. Anyway, that was a pretty long update, but let's move on. We got our final segment, Inside the Lines. And I know, Mary Ellen, you've got some stocks. And just for the maybe new viewers out there, what we're doing on Inside the Lines is literally focusing on the technicals. So focusing on what is taking place inside the lines on the charts, not really worried about what's taking place fundamentally, because for us, technicals lead fundamentals. So with that, I'm going to let you take it away, Mary Ellen. What do you have? And I'm not hearing you. All right. I don't know. I think we're having a technical problem here with the audio for Mary Ellen. So I'm going to go ahead and, I mean, I guess we could pretend that we have a silent movie here, but I don't know that you all are going to get a whole lot out of that. So let me go ahead. I do know the stocks that she was going to talk about. So let me go ahead and pull them up, and I'll give you my take. Hopefully it's similar to what Mary Ellen has as well. But let me go ahead and pull this up, and we'll take a look at it here. So her first stock was Intuit. And I got to tell you, Intuit, let me pull it up on the daily chart. This is one of my favorite stocks out there. It's a great looking software company. Here was the earnings report that came out on Intuit. Big move to the upside. And you can see the volume supporting this move. For those of you who don't follow candlesticks, that is pretty close to a Maribozu candle. And what those candles are is when you open on the low and you close on the high. Now, you can see a little bit of a tail here at the top, so it didn't quite close on the high, but that's pretty darn close. And when you get heavy volume and you open on the low and close on the high, it is just an indication of buying and accumulation all day long. And that kind of volume coming in tells me that this isn't just you and me accumulating. This is institutional accumulation. And coming off of sideways consolidation, and then getting the breakout followed by this earnings report and more buying, I think Intuit is one of the better looking stocks. And I would be shocked if we are looking 3 months from now and Intuit isn't higher than it is right now. So I believe Intuit looks very bullish. And I'm assuming Mary Ellen had some bullish comments on that one. DLTR, this is Dollar Tree. Now, Dollar Tree made the huge run back at the beginning of 2019 after breaking out above sideways consolidation. Went back. Where did we pull back to? 20-day moving average. That's where, you know, if I was looking at this chart on January 7th or 8th, I would have said something like, well, maybe we'll pull back at some point, get a 20-day test, and then your reward to risk is much better. This is kind of what I'm looking for. So Dollar Tree, I think, pulled back orderly, hit its rising 20-day, and then it's all the way back up near the high. So if you buy it at the high, then you're into this 6 weeks later and you have no profit to show for it, and probably getting a little scared on the first move down. But if you buy it at 93, 94, then you're, by the time you move back up, you got a 6-7% profit. Anyway, that's just the way I like to trade. I don't like to chase. I'd rather put a stock like this on a list, chart list, and then wait for it to come back to me. And I can run scans against it to see if I'm going to hit that 20-day moving average. A lot of different things you can do with it. But anyway, nice bounce here on Dollar Tree. And notice the pullback here. I now look at this as great support. Gap support and price support both coming in at 93. And even though that's a little bit below the 50-day, I'm a price support kind of a guy when I'm trading. So I want to see 93 continue to hold. If we go a little bit below the 50-day, it's not going to bother me as long as 93 holds. All right, let's go on to Twilio. Boy, Mary Ellen has pulled up some good ones. I love Twilio. They did, I think, match estimates in their last quarterly report, but they beat on their top line. They raised guidance, and they are in the software space, one of the leaders, and you can see now breaking out again. Here was their earnings report where we had pulled back. We hit that rising 20-day moving average, and also look at the prior high, which was 105. We held that 105 level, and now here we are 2 weeks later, and we're at 122. Beautiful move up. What's that, 16%, something like that? A really nice move up on Twilio.
Can you hear me now, Tom?
Yes, yes, I can.
Oh, wonderful. So, I'm back. Yeah, great. I'm with you all the way. I've been watching, and you are spot on with all of these stocks.
Right, well, I'm going to let you take it back because I know you have.
Okay, super. Yeah, I'll go ahead and dig right in and take a look at a couple of other names. So Twilio was one, and certainly another one that we can take a look at here is, okay, if I can, I'm just having difficulties all around. Yeah, so one other one that I wanted to look at very quickly, and it'll lead us into, it wasn't on the list, but it's more as an example. This is Xilinx. This is a semiconductor. They're big in the communications networking 5G push, big gap up on very strong earnings. But what I wanted to point out to you is a phenomenon that's happened with a lot of these stronger stocks that gap up huge volume, another big pickup day, and just continuing to advance. And so very constructive, still very much in an uptrend. Wanted to point out how it can remain in that overbought position for some time as it continues to journey upward. So with that, I did want to introduce another stock that had a big pop yesterday, and it's with an eye toward what to look out for the stock to continue. This is Horizon Pharma. So it had a big gap up here yesterday, and it is very much further removed from that 10-day simple moving average. So we very well may give some of the yesterday's gains back, but ideally we will want to see a continuation of that uptrend, and it may take time. You may need to see that 10-day catch up to the rest of the price, but I was going to go ahead and take a look potentially at an intraday chart to give you a better feel for what to be on the lookout for. But let's go ahead and take a look. Tom talked about Tandem, and I really liked what he had to say, because this is the medical products stock that we were looking at earlier in the 10 and 10, and I'm going to go ahead down here and modify the resolution so we can see the entire screen. And so Tandem had a gap up, and indeed it was on earnings, very constructive. The stock was one of the biggest winners last year. It was up over 1,500%. But more importantly, we want to take a look at during that uptrend, similar to what we're seeing with Xilinx, is it can remain in that overbought up above that 70 for quite some time as the stock continues to advance. I have a 10-day simple moving average on here. So as long as the stock can continue to find support at an upward trending 10-day simple moving average, you're in good standing. And of course, you want to combine that with a positive RSI. MACD is up here above that net neutral. So yes, 2 days ago, we did have that gap up, big volume, and we are continuing to see the stock advance. We can take a look at other gaps up on earnings, and you can see where the stock will have a period at some point of consolidating or pulling back to that 10-day. And oftentimes that's your opportunity to get into that big potential winner. And wondering if I have time to take a look at one other stock. I'm going to preface this stock as well. Biotech stocks have been bouncing around a bit, but they are finding traction this week. They're up over 3%. This is IBB, the NASDAQ Biotech ETF. So with that in mind, I'm going to take a look at one of the larger cap stocks within biotech. RGEN is the ticker symbol. We're looking at a daily. This is Repligen. And what we can see is the stock really was in a back and fill, and that's in line with what we were seeing. Biotechs were languishing for the most part below that 200-day simple moving average. But more recently, we are seeing, and during that whole period, the RSI remained positive. So if you own a stock and it's just back and fill, but you're getting other technical signals such as a positive RSI, a MACD that's above that net neutral, you can, for the most part, stay with the stock. But what I did want to point out to you is, for instance, today's action is putting the stock into a near-term high. So your overhead resistance is going back here to October. It's far enough away so that it should not hinder the potential continued uptrend. And I talked about that 10-day. This is your green simple moving average. As long as the stock is able to find support at an upward trending moving average while your other indicators are positive, the stock is certainly worth visiting.
Hey, Mary Ellen, I have a question for you.
Sure.
Biotechs haven't really, had the strength that a lot of the other areas of the market have had. I mean, you got a nice bounce there on the IBB back in January, but then we, for the most part, went sideways for a while the market kept going higher. So my question is, how much of a role does diversification play in your trading? Do you try to diversify in different areas, even if maybe some of those areas are underperforming?
I'll tell you what, for me, the diversification is going to be all about I traffic in very, very high growth. Twilio's on my suggested holdings list. We got Xilinx before the earnings. So these big growers, these big, when I talk about diversification, it normally is going to be, for a while, it was the real estate investment trust. It's yield stocks that counterbalance should these high growth come into trouble. So that would be my way to diversify as opposed to into a different area. But the reason I like to see biotechs moving is because it's a very risky area. Investors going into these higher risk indicates investor confidence. Yep. And potential more upside for the broader markets.
Yeah, I completely agree. I mean, some areas of healthcare are definitely more defensive, like pharmas, but biotechs, you got to be somewhat aggressive to go into those.
You bet.
All right. Let me pull up a couple charts. All right, first I have Stericycle. And you can see the gap up. This was earnings related today. And to me, I like seeing these kinds of gaps off of a downtrend because this is a sign that you've got potentially a breakaway gap and a change of character on the chart. I don't think there was any question Stericycle was in a downtrend, and the reaction that it had, the reaction high here back in January and February, relative to what was going on in the market and relative to what was going on with its peers in the waste and disposal services area, was really kind of anemic. This move back to the upside was not very good when you consider that the overall group that it's in was breaking out to new highs. I mean, look at where Stericycle was back in August and where it is now, and look at where its peer group is. I don't even need a relative chart to tell me how bad this stock has been. But all of a sudden now they come out with some numbers that surprised the street, and we got this breakout, and we're trading near the high of the day, and you can see the relative strength all of a sudden jumping. I think this is a stock now that you can kind of keep on a list as potentially a winner because it's in a good group, and now all of a sudden it's showing signs of being a leader. Now, if we go back and we fail to hold the lows that it established earlier today, then I got some more problems that, we'll have to look at. But I think that the low today is where the buyer stepped back in. So 48.11, I think, is a great support level, and I think this is a stock certainly that we could consider. And I think it's a good example of inside the lines that what this is telling me now is that we potentially could have a leader breaking out and changing that downtrend that we were seeing for so long. A few other stocks. NetEase, boy, this has been a laggard. Look at what the market's been doing and then consider what NetEase has been doing. It's just not good. It's been a horrible February, and it is taking out these prior lows, gap support that was holding around 220. this just doesn't look good. The failures at the 20-day moving average. I believe NetEase is going back down to challenge these lows below 200. I would stay away from it. REG, we got to take a look at some of these real estate stocks. Mentioned earlier, real estate could be in some trouble near term. Actually, I'm going to pull this up on a regular chart because I wanted you to see the negative divergences. And this is one of the problems I have with real estate. Many stocks in the area, higher prices, lower PPO, and they're rolling over and they're starting to lose key areas of support. Another one in real estate, Simon Property Group, same thing, rolling over here, and you can see the PPO rolling over, and we've already gone down to test that 50-day. Close below the 50-day would be particularly bearish. And then the last one I have is GE. GE definitely is starting to show more signs, more bullish signs, but 4 of the last 5 days on heavy volume, we've got filled candles, meaning that we're closing below the open. So even though, we're moving higher, it's still showing signs, some signs of distribution. Just keep watching that rising 20-day. GE, if it continues to uptrend or if it stays in an uptrend, should continue to hold those 20-day moving averages. Okay, let's go ahead and pull up a summary for Inside the Lines. And these are the stocks that Mary Ellen and I just spoke about. And tell you what, when we get a minute, I'd like to kind of see what everyone's trading style is that's following the show today. So that was the poll today. Just finding out, are you long-term investor, swing trader, day trader, position trader? First of all, where would you characterize yourself, Mary Ellen?
I am definitely with an eye toward longer term. I like to pick high quality growth and hang on for the ride, so to speak. So kind of medium term might be a better terminology.
Yeah, I kind of see you as either that or maybe even position trader, because you talk about, some of these high growth stocks and you stick with them as long as they continue to do what you need them to do, both technically and fundamentally. So
good wording, yeah.
Yeah, so I don't know. And if you're unfamiliar with these different terms, day trader, literally a day trader has no positions overnight. You are buying and selling throughout the day, and you are 100% cash when you end the day. So just because you happen to buy and sell on the same day doesn't, in my opinion, doesn't make you a day trader, because I consider myself to be a swing trader, maybe a medium to longer term swing trader. I like to hold as long as my stocks are in good shape until they hit their target. And that might be a day or two, or it might be, a month, maybe 2 months. So
you have a percent when you do target. Is it?
Well, the percent is established really by the resistance. So for me, it's more about managing my risk to the downside versus my reward to the upside. So if I have a 10% stock, a stock that I might make 10% to the upside, but I have to risk 5% to the downside, I'd rather go with a different stock that maybe I have a 6% upside, but only a 1% downside. So I have a 6-to-1 reward to risk ratio on that latter one, whereas the first one I only have a 2-to-1 reward to risk.
Sure.
So it's really, for me, about managing risk.
Very good.
Yeah. So anyhow, that is going to essentially bring us to the end today. I will just show you one last time what's going on in the market here. We do have the Dow Jones Industrial Average up 71 points, NASDAQ up 42, and the S&P still battling with that 2,800 level just below. And we talked earlier in the show, we want to keep an eye on this 28 to 2820 area. It's really hard to argue the bearish side of it, I think, if those key price resistance levels get taken out during this uptrend. I don't know. That's just my opinion. And then, of course, we got the Russell 2000 up 9 points. All right, here comes your upcoming schedule. As always, it was great having you on the show, Mary Ellen. I want to wish you a great weekend, and we'll see you back here next Friday.
Yeah, sounds great, Tom. Thanks.
All right, and I want to thank all of you for being with us today as well. Please remember to complete the survey as you exit. And again, if you have any topics for me for next Tuesday on my workshop, add it into that survey. I'd love to read it, see what you think. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everyone. Enjoy your weekend. Be safe, and we will see you back here on Monday. Happy trading.